Hi everyone, very good evening and welcome back to the CGP IBPS Hub, right? So we are going to start the another lecture on the topics that we need to prepare for the interview, right? So let us start with it. Today we have two important topics to discuss, and the first thing we are going to start with, we know that RBI manages central government as well as the state government debts, right? How it does, what are the peculiar terms that are associated with this particular concept is something we are going to see in this particular lecture. Now let us start with RBI's role as a debt manager to the government. See, RBI acts as a debt manager for both central as well as the state government because it has been given in the Indian Constitution that RBI is going to act as debt manager. Now, it manages the public debt, issues new loans, services existing debt, that means interest payment and all. This all comes under the RBI purview. Repays the loan as well. Any other operational matter that comes along is also handled by the RBI. So you have to understand that when we say RBI issues government securities, it does it on behalf of central government, and not just for the central government, the same kind of function is being performed for the state governments as well. So this is the point that you need to remember in the role of RBI. Fine. Next we have the ways and means of advances. We'll talk about this separately as well, but यहाँ पे देखिए RBI provides short-term advances to the government so that temporary mismatches can be bridged. Now the key word over here is, see, if there would be a long-term mismatch, that means if the government needs funding for a longer time period, ज़्यादा समय के लिए चाहिए होगा तो क्या करेंगे? If you need funds for a longer time span, we are going to borrow. ठीक है, तब तो आपको क्या करना पड़ेगा? बोरो ही करना पड़ेगा. बट इफ दिस इज अ टेम्पररी मिसमैच, आरबीआई प्रोवाइड्स देम एन ओवरड्राफ्ट काइंड ऑफ फैसिलिटी दैट इज कॉल्ड एज वेज एंड मींस एडवांसेस. उसको हम वेज एंड मींस एडवांसेस कहते हैं. नाउ वन मोर थिंग इज, just a second, yes, apart from providing this, if you in the upcoming pages we are also going to see that if the central and state government they are having cash, ठीक है, अगर मान लीजिए इनके पास में cash है, so that particular cash is also going to be managed by the RBI. That cash would be invested somewhere so that the earning can be earned out of that particular asset as well. We don't want that cash to lie like that, right? And we do not earn anything out of it. So this is also something which is addressed by the RBI. Surplus cash management, yes, that is the point I was explaining to you. Now next thing you have to also, it is not that very much crucial, but we have to understand this in order to complete the topic in its entirety. So we have medium term debt management strategy. ठीक है, यहाँ पे आपसे क्या बात की जा रही है? See this. Few things that to be noticed over here. Mobilize the borrowings at low cost. Nobody wants to borrow at a higher interest rate. If I am borrowing, I would like to pay a lower amount of interest rate instead of paying a higher amount, right? Well understood. It does come under the common sense. Now over the medium to long term, while managing risks and ensuring a stable debt structure. Okay, medium to long term as well as stable debt structure, promoting the development of liquid, well-functioning domestic debt market. See, RBI has got different kind of objectives. Number one is, obviously, government needs both kind of funding, short term, long term, but there needs to be a balance between these kind of funding as well, depending on the requirement. Suppose if the government has to invest in some kind of scheme, right, the results of which would come in a longer time span, तब आपको किस तरीके की borrowing करनी पड़ेगी? Obviously long term in nature, right? But if there are certain tasks for which you need the money for a shorter time span, you should always go for short term funding, short term liabilities like treasury bills. ठीक है, तब आप कौन सा किस तरीके का tool use करेंगे? Treasury bill का tool आप use करेंगे. That is number one thing. Number two is RBI wants that the borrowing cost should come at a lower limit. ठीक है, borrowing cost आपको कम से कम देनी पड़े. So this is also which is kept in mind. Standing committee is there that has officials from Ministry of Finance as well as the RBI. Okay, see this. There is a standing committee, monetary group on cash and debt management, and that sees the implementation of debt. Does it have government representation? Yes, Ministry of Finance is represented over here, officials from Ministry of Finance as well as RBI. They come together and then they manage the debt situation for the government. Now, this program we have seen, market borrowing program. So, RBI borrows for central government, state government and union territories. This includes issuing new loans, retiring existing loans, paying interest, handling operational issues like debt certificates, etc. Now, there is a half-yearly calendar which is prepared for long-term borrowing. Okay, and then for treasury bill, a quarterly calendar is prepared. You see, this is borrowed for a shorter time period, treasury bill, and for long-term borrowings, we have a half-yearly calendar, how we are going to do that. Now, this is done based on what are the budgetary needs, how much funding you need, right? And what are the current market condition. See, there is an impact which is called as crowding out impact. Crowding out impact हम किसको बोलते हैं? When the government borrows in the market wants to give the funding to government because it is practically risk-free. But if the government borrows excessively in the market, it may dry out funding for other participants. ठीक है, बाकी लोगों को पैसा मिलेगा ही नहीं अगर government बहुत ज़्यादा excessive borrowing कर लेगी तो. So that is why it has been said that the borrowing would be done as per the budgetary requirements, the funding needs as well as the market condition that is there at that particular moment. Now, talking about some instruments of market borrowing, how it is done, let's see this. See, fixed rate bonds, fixed rate and floating rate. What is the difference over here? See, bonds का मतलब क्या? That you are borrowing. Okay, you are saying to the public that dear public, please give us a fixed sum of money, let's say 1000 rupees, and we will give it back to you after 10 years. Okay, I'm saying that give me an amount, just like we do it in the loan, give me an amount of let's say 1000 rupees, let us call this amount as a principal, and meanwhile I'll pay you interest on it. ठीक है, मैं आपको इस पर interest दूंगी just like we do in the case of loan, and after a specific time period I'm going to return your principal. मैं आपको ये पैसा वापस कर दूंगी. Fine. Now in this particular situation, when I am going to give you interest, I can give you a fixed rate of interest that is let's say 7%. ठीक है? So 7% interest I am going to pay you concurrently. But if I say that it is not going to be fixed, it is going to be floating. Floating का मतलब this interest rate will keep on changing as per the market situation. Okay, so that is called as the floating rate bonds. Fixed rate bonds, most popular, pays the investor fixed coupon rate. Floating rate is the interest rate changes on the basis of benchmark rate. Benchmark rate का मतलब क्या? Suppose I have said that whatever is the repo rate, I will pay you 1% above than that. Okay, so I have taken repo rate as my benchmark. मैंने repo rate को मेरा benchmark लिया and I have said that I'll pay you over it. Fine. So now my interest rate will keep on changing. If now the repo rate is 6.5%, which is the current repo rate, my coupon rate, that is interest rate, which the government will pay to the investor is going to be 7.5. Now let's suppose if the repo rate decreases, if it becomes 6%, then the interest we are going to pay is 7%, right? So this is how it keeps on changing. Then we have zero coupon bonds. Zero coupon bonds क्या होते हैं? They are issued at discount and redeemed at face value. So government says that right now give us 9,000 rupees and we will return you 10,000 rupees in 364 days. In 364 days, right? So this is the example of treasury bills as well. Treasury bills, they are issued for 3 durations, 91 days, 182 days, 364 days. They are an instrument through which government borrows for its short-term requirements. अगर सरकार को थोड़े समय के लिए पैसा चाहिए होगा, then the government through RBI, they will issue treasury bills, right? And they will say that we are going to issue it at a discount and then we will redeem it on face value. So right now you will pay 9,000 rupees and when the government will pay you back, government is going to give you let's say 10,000 rupees. So the difference of 1,000 is obviously your interest income, ठीक है? यहाँ पे इसको जीरो कूपन क्यों कहते हैं? बिकॉज देर इज नो पीरियोडिकल पेमेंट ऑफ इंटरेस्ट. पीरियोडिकल पेमेंट ऑफ इंटरेस्ट नहीं है. वी हैव sovereign gold bonds as well. So what we are trying to do? We are saying to the customers that instead of buying gold, buy these kind of bonds. Money will go to the government and government will give you the same return as holding of physical gold will give you, right? So instead of buying, let's say 10 grams of gold in the market, I can buy similar unit of bonds and this will give me the same return. Okay, so this is called this is sovereign gold bond scheme and this is also one of the mechanisms where the government says to the public that instead of buying the gold, please buy this. And this will reduce our import bills as well. Then we have inflation index bonds. Inflation index bonds where we are saying to you that listen, right now we are paying you let's say 6%, right? Interest. Now this interest we will increase as the inflation increases. ठीक है, अगर जैसे जैसे आपका inflation बढ़ता जाएगा ना, हम आपको ये बढ़ाकर देते जाएंगे. Getting the point? Now, bonds with call or put option. So it provides the flexibility to the issuers as well as investors to manage the interest rate risk, and this is rarely issued. Then you have special securities like oil bonds, fertilizers bond, which is issued for reviving the OMC's fertilizer company in lieu of the subsidy payments. Then you have recapitalization bond, Uday bonds that were for with the intention of power distribution companies revival, right? So right now यहाँ पे हम आपको क्या कह रहे हैं that these bonds which have been issued, the money has been utilized in a specific sector. ठीक है, पैसा एक specific sector में utilize किया गया है. Just give me a moment. Okay. Okay, fine. Now let us see the RBI's role in the government securities as well as the cash management. ठीक है, तो यहाँ पे what RBI has done is commercial banks are normally the largest investors in the government securities followed by the insurance company. That means when the RBI issues bonds or government securities, who purchases it the most? Commercial banks and followed by insurance company. Why such kind of instruments are purchased? Because they are practically considered risk free. हम इनको क्या मानते हैं? Risk free मानते हैं. If you will invest over here, there is no issue at all. ठीक है, यहाँ पे कोई भी issue नहीं है. Now RBI has eased the rules for foreign portfolio investors as well. They have voluntary retention routes. Even non-residents, NRIs, they also have fully accessible route through which they can invest in the government securities market. ठीक है, RBI has eased out the process so that we can attract more investment for the government. RBI also manages the cash. We have already seen that. For central bank, what would be the limit of the advances that is given for temporary mismatches? It would be decided by RBI in consultation with the government. ठीक है, State governments are also provided with this particular facility. It includes a special drawing facility which is given at a lower interest rates also. Now next we have the regulation of financial markets by the RBI. So let's see this. Over here we will read about different kind of institutions along with whom RBI regulates the financial sector domain. ठीक है, जिनके through RBI what you can say regulate करती है different kinds of institution. So we have RBI regulates money market, government security market, foreign exchange market, as well as corporate debt market along with forex market also. Okay, so over here it coordinates with the market representative bodies. Like for fixed income and derivative market, we have the association FIMDA, Fixed Income Money Market Derivatives Association. For foreign exchange market, we have Foreign Exchange Dealers Association of India. Now, how do we understand that? किस तरीके से समझे इनको? So I'm sure that in your city there might be associations, right? For example, these auto rickshaw drivers, they have an association of theirs, right? In any, let's say Bengaluru city is a very good example of it. Apart from that, if you will see, in case of Jaipur, you will see the association of jewelers, right? They have formed an association to represent them as a unified body. Okay, so the similar kind of situation is there. Your foreign exchange dealers, they are associated with this particular organization so that RBI has the power. If RBI wants to communicate something, then it has got a organized organization where it can communicate it and it knows that the member will get to know about this particular update. Primary Dealers Association we have. Then there is an organization called as Financial Benchmarks India. So your FIMDA, FEDI and IBA, they have together formed this organization, okay, for coming up with the benchmarks for the money, GSEC as well as the forex market. See, benchmarks क्या होते हैं? Like I'll tell you, repo rate is a benchmark. ठीक है? Benchmark is any interest rate which we seek to pursue, जिसको हम फॉलो करना चाहते हैं while providing funding or while writing any kind of interest rate, right? So FBIL is a premier organization in that particular segment. When we'll discuss about them separately, there we are going to see this in detail. Then we have Clearing Corporation. So this is the, see, RBI handles issuance of government securities, right? Both in the primary market and secondary market. What do I mean to say? कि यहाँ पे when a trade is happening, what you have to do is you have to settle the trade. Settle the trade का मतलब क्या होता है? That one party should deliver the security and other party should pay the amount. This is called as settlement. So which is the organization who's going to perform this particular function? So this is your CCIL, okay? Established in 2001, and it provides you with the clearing and settlement mechanism for the government securities, money market and forex transactions. Okay, it does the counterparty based settlements for cash and derivative products. So you have to remember FBIL for benchmarking, you have to remember CCIL for clearing the transactions that are happening in the money market. ठीक है, money market related transactions कौन सा institution है जो settle करेगा? This is the only clearing corporation you have for the money market. Then there are some instruments of the money market that we have to see. Let's see that. See, first of all, we have the call or notice money. Okay, call money, notice money का मतलब commercial banks require money on an overnight basis. ठीक है? So where they are going to do? They will seek the funding in the money market, right? And when commercial banks need money overnight, that is called as call money. If it is needed up to 14 days, it would be called as notice money. And if up to a year the amount is needed, then it will be called as the term money. तब हम इसको क्या बोलेंगे? Term money. So this is unsecured. That means no collateral is being provided. Lending, borrowing among scheduled commercial banks. They act as lender as well as borrower. ठीक है, lender और borrower की तरह act करते हैं. Cooperative banks, primary dealers. Now the payments bank and small finance bank, they are also allowed to participate in the call or notice money market. Call money market, this is what it is being referred to. Now repurchase agreement, repo. So I have explained this to you yesterday as well. Over here RBI says that we will provide you the funding given that you keep government securities with us with an obligation to repurchase it later on from us. So this is repo. Informally we say this, that if you want to take the money from RBI, RBI will tell you that 6.5% is the interest rate that we are going to charge. Apart from that, what you have to do is you have to provide the government security to us in form of collateral, right? So borrowing and lending, this is repo auctions that happens in the money market. Okay, eligible security, what you can give to the RBI for seeking the repo funding: government security, treasury bill, corporate bonds, etc. Commercial paper, again an instrument which is issued by the corporates. Who need the funding over here? Corporates. Must have a net worth of 100 crores or higher. Certificate of deposit issued against fixed deposit. Banks, what can be the duration for banks? 7 days to 1 year. Financial institution, 1 year to 3 years. This could be the duration. Okay. And then non-convertible debentures. So debt instruments with a maturity of 1 year. These can also be issued. Now there are certain other instruments, interest rate derivatives. Okay, over here what is going to happen? Forward rate agreements, interest rate swaps, rupee interest rates, and some other structured derivatives. Who can participate? Both residents as well as the non-residents. Floating rates must be approved by the Financial Benchmark Administrator, that is FBIL. Okay, over here derivatives का मतलब क्या होता है? This is a kind of financial contract, the value of which depends on the underlying instrument, and over here the instrument is interest rate. Now if I have to tell you in a very easy manner, understand, suppose I know that in the upcoming future I have to pay interest rate of 9%. Now I want to hedge this particular risk. मुझे पता है कि मुझे 9% का interest pay करना पड़ेगा और मैं इस risk को hedge करना चाहती हूँ. So what I'll say, I'll enter into a contract. ठीक है, मैं एक contract में enter करूँगी where me and the other person, we are going to exchange our liabilities. Okay, I'll take his interest rate, that is 7.5%, and he'll take mine, that is 9%. Mine was a fixed interest rate and his was a what you can say floating interest rate. ठीक है, मुझे लग रहा है कि interest rate आगे चलकर बढ़ जाएगी, इसलिए I am taking 7.5%. That was his liability, and he is thinking that interest rates might increase, and that is why he is taking 9%. This is what the kind of instruments are. Then in the government securities, that is also traded in the money market. Okay, you have to remember that government security, if they are bought and sold again after first time issuance, RBI is issuing them first time. ठीक है? After that, if there is a sale and purchase, so which platform it will happen on? NDSOM, that is negotiated dealing system order matching, that will facilitate the transaction. And also FPIs can invest 6% for central government, 2% for state development loans. ठीक है, this is the limit which has been done. Why there is a limit? Because FPIs are called as hot money investor, and they can fly at any particular moment of time if they see that there is any problem. अगर उनको लगता है that your economy is going downhill, in that particular situation they can take their money out and you would fall into pieces. So that is why their investment is always restricted up to a limit. क्योंकि हम नहीं चाहते that they one time they are investing a lot and then on the other day they are taking the money out. So this is not something we will approve, and that is why the limits have been there. This is it in this particular lecture. I hope you would have understood it. If you did, then please do not forget to like this video. Thank you so much.